Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Hello and welcome to Bloomberg Went Live, and you're watching Trend Spotting. I'm Navneet Saluja D'Souza.
And Navneet, I'm Agam Akil. In the next 30 minutes, we deep dive into specific trends in the markets to draw out key takeaways and its implications for investors. First, the headlines. Markets erase early gains as both benchmark indices trade with marginal cuts. Broader markets outperform. And GAIL is among the top Nifty gainers after IOC BPCL show interest in acquiring government stake. And ONGC Videsh aims to producing at blocks rather than reserves to meet its goal of raising output by more than half in 3 years. And Vijay Rupani is sworn in as the Chief Minister of Gujarat for the second time in a grand ceremony in Gandhinagar.
All right, let's take a look as to what's happening with the markets right now. Well, we opened at fresh highs in the morning trade, but from thereabouts, we've seen a bit of profit booking coming at higher levels. Nifty is currently trading below the mark of 10,500. Sensex to touch the mark of 34,000 in the opening session, but it's down almost 70 points from those high levels. Well, the broader markets definitely seem to outperform in today's trade as the Nifty Mid-Cap Index trades with gains of 0.5%, and also the Nifty Small Cap Index right now is trading with gains of almost 0.8%, and that's pretty much visible when you talk about the advance decline ratio on National Stock Exchange, which so far has been in favor of the advances. There you go, that's the advance decline ratio telling you it's almost about 2:1 in favor of advances. Well, in terms of sectoral indices today, what's outperforming is the Nifty Realty Index and also the Nifty Metals Index. You've got stocks like Jindal Steel and Power in that segment, and also the DLF in the Nifty Realty Index seems to be outperforming in today's session, whereas a bit of underperformance seen from the Nifty PSU Banking Index, because of which the Bank Nifty is also trading in the red as of now. Bank Nifty is down almost 0.2%. Volatility since the morning session has been on the higher side. The India VIX has been trading with gains. It is trading above the mark. It's come below the mark of 12, but still up almost 3%. Let's just pull up the contributors list among the Nifty constituents and check which are the stocks which are supporting the index today. So Vedanta, Sun Pharma, ITC, Yes Bank are contributing the most, whereas what is capping the moves are the likes of HDFC Bank, Infi, State Bank of India, as well as HUL Agam.
Well, in the broader markets too, Navneet, very much in line with the benchmark indices. So if you consider the Nifty 500 index, we have 3 gainers against 2 losers. In gainers, we have JP Associates, which is making substantial gains. In fact, an advance of 8% there, and currently trading at just shy of the 20 mark. We have gains in Mahindra CIE Auto. That's also gained 6% in today's day of trade. Gains in Naveen Fluorine, Jet Airways, Fortis Healthcare, and Cummins India, all gaining well over 5% in today's day of trade. On the weaker end, it's Bombay Rayon Fashions showing up once again at the lower circuit, and weakness now coming in Syndicate Bank. TV Today Networks, which has been so strong over the past 5 or 6 odd sessions, is looking at some amount of profit taking, which is down by as much as 3% still, holding on to 450 for now. And Adani Transmission, along with Religare Enterprises, among some other counters, losing out on today's day of trade. But as far as the advanced decline ratio goes, Navneet, again towards the positive, and that will be something to look forward to for a lot of bulls.
Well, that's right. So far, the momentum is still on the upside. What we are seeing is some bit of profit booking, but Nifty has been trading in a very narrow range. And also remember, the Asian markets today had a mixed opening. It is the holiday season, therefore, the volumes will be on the lower side. But on Trend Spotting today, we discuss the end of season sales trends and growth outlook for Shoppers Stop as we connect with the Managing Director, Govind Shrikhande. We put the focus on ENIL and what is making brokerages positive on it as we connect with the Managing Director and CEO of the company, Prashant Panday. And we discuss what's moving the markets today. On to our first trend of the day. It is that time of the year where almost every store welcomes in more and more customers with attractive sales and offers. Well, with the ongoing holiday season, how have the sales trends panned out for Shoppers Stop? Let's ask the Managing Director of the company, Mr. Govind Shrikhande, who joins us on the show now. Mr. Shrikhande, good morning to you and thanks a lot for joining us today on Bloomberg Quinn. Tell us, how has been the third quarter so far and how are the sales panning out in the holiday season?
Classically, December is a marriage period, and post about 10 days of December, the traction starts for the whole Christmas period. We haven't yet seen a big traction this year, but we believe that, okay, the Christmas week, which is coming up now, should really lead to a better traction.
Mr. Shrikhande, then what's the update on your store expansion plans? If you could tell us about what, based on your expectations of 2018.
So we opened more than 4 stores during the year. Another 2 stores are coming up between December and March. And going ahead, every year we are still targeting to open about 5 stores a year, which have been signed on for the next 3 years' time. So today we are at 81. We should close the year at about 83, and then with the addition of about 15 stores over a 3-year period, we should be nearing 100 stores very clearly. We are also adding on in our beauty format, the Estee Lauder, MAC, Clinique, Bobbi Brown, Smashbox portfolio, about 10 stores a year, and that number again should cross 100.
Sir, you've also introduced a lot of new private labels. Could you tell us what is going to be the contribution of those new labels to your revenues in the near future?
Currently, we have a contribution of about 15% coming out of our private brands and exclusive brands. The way we are targeting to grow the portfolio is not by adding of new brands, but by really getting traction into the existing brands themselves, which is Top, Life, Kashish, Hot Curry, Vittorio Frattini and Frattini Woman and Elisa Donatien. Those are the key brands that we have in the apparel side. We do have other brands also the home side, but the main driver would be apparel. And the way we are targeting is over the next 2 years, take the share to about 22% over the next 24 months period, from the current 15 to go to 22. We are doing a lot of work there in terms of pricing, assortment, fashionability, presentation in the store as well, and branding, which will really drive this growth.
Right, so what is your expectation of same-store sales growth as we move into the new year?
So we have always been targeting at least 8% like-to-like growth, and we believe Q4 we should be able to achieve that and similar or higher number in the next 2 financial years, because we believe all the impacts of demonetization, GST are getting over by the end of Q3. So 2018 should be a great new beginning, and that should continue well if the economy continues to grow the way it is growing right now.
Sir, could you tell us where have your plans with Amazon reached? Because there was an announcement this year where Amazon acquired 5% equity in Shoppers Stop. Could you give us any updates on that front?
This tie-up actually operates on 3 levels. One is our catalog getting uploaded on Amazon.in. Number 1, we already started uploading the catalog, but by Jan end the catalog will be fully operational and will also be like an anchor store on Amazon's fashion page. Number 2, lot of activations are planned in next year between our First Citizen membership program, their Prime membership program, and joint marketing programs that would also be rolled out. And plan 3, again in the next year, sometime around the second half, would be creating experience centers, Amazon experience centers within Shoppers Stop. We believe that our online traction should really take off because of this partnership. And right now, I wouldn't like to make any numbers here, but overall, we believe our online growth including what we are doing through shopperstop.com and Amazon, should at least be growing beyond 100 to 200%.
Right, so the company has invested about 60 crores in 3 years and expects to put in another 10 crores every year for maintenance capex. So based on that, can we expect the omni-channel to grow as much as 30% like we've seen in the previous 1 year?
As I mentioned, we have targeted more than 150% growth in the overall online space. Currently, we are growing at about 70% on our shopperstop.com. So the combination of shopperstop.com and Amazon.in listing should really double up this pace of growth for us on the online area. As far as investments are concerned, we already invested in a lot of software, hardware of more than 60 crores in this space. There will be some continuing expansion and addition in software to the tune of about 10 crore a year, which should help us in maintaining the run and maintaining the lead.
Sir, could you tell us what is going to be the focus area going into 2018 for ShopperStop?
I think we have been working on 3 big categories for the last few years. One of them has been beauty, which has been growing very well, still continues to grow double digit, even in a slow market. Especially we are seeing in December month, really growing very, very well. The second category that we have been focusing on has been personal accessories, which includes watches and sunglasses as a category. And the third big category that we believe in is growing is women's western wear along with ethnic wear. So a lot of women's focus at an overall level between beauty and apparel. And for men, definitely it's the accessories, which is watches and personal accessories like goggles, etc. So really these are the 3 categories that have continued to grow well and will come into bigger prominence in the coming years as well.
All right, Mr. Shrikhande, we'll leave it at that. Thanks for joining us and giving us an outlook on your company and, of course, 2018. But with that, we'll move on to the next trend and, the next management for that matter. We have ENIL, which is a stock in focus, and the counter is registering smart gains in trade today after Motilal Oswal recently came out with a report that it expects a revival in its ad revenues in November and December. And what have been the key factors that have been in play for the counter, and what does growth look like for the company? Well, to answer all these questions, joining us on the show is the Managing Director and CEO, Prashant Panday, and also our colleague Saloni Dhanuka, who will help us decode perhaps the new trends that the company is facing. But Mr. Panday, I'll start off with the possibility of the pangs and the challenges that GST had brought about earlier. How much of that do you think is already in the past now? And based on that, what kind of growth are you seeing and what kind of trends are you seeing in ad revenues coming in?
Well, the impact of GST is obviously pretty much over. However, it has created a situation where advertisers who were affected badly in the July, August, September quarter, for instance, are now cutting back on advertising to protect their bottom lines for the full financial year. So the impact on advertising continues, even though the business for our advertisers is getting back to normal.
All right, sir. Government has recently approved bids for 680 FM channels in 236 cities. So how will it pan out for private FM broadcasters, especially like Radio Mirchi?
Sorry, what was the question? Can you just repeat that?
So government has recently approved bids for 680 FM channels in 236 cities. So how will it pan out for private FM broadcasters?
How will it pan out for private FM broadcasters? Well, I think this is the third batch that the government is now getting ahead to auction. It has already completed 2 rounds, as you know. 2 batches have already got completed. The third batch should happen, I'm told, anytime in the next few months. So yes, it is I think the last batch of the phase 3 policy. And private FM broadcasters are the ones who are expected to bid over here. This is meant for the private FM broadcasters. Even though in all honesty, I believe that the enthusiasm for bidding will be very muted this time around, just like it was in the second batch. And the reason for that is that the government really has not modified any policy. They have not taken into account any of the feedback that the FM industry has been giving them. And therefore, to that extent, it is just a completion of the earlier policy. And I expect that the third batch will also meet with a muted response just as the second batch did.
And so according to a Motilal report, company is planning to spend some 300 odd crores in FY19 to acquire TV Today's 3 radio frequencies and also on phase 3 auctions. So could you give us a confirmation over the same?
No, obviously I cannot give you a confirmation of the financial deal, but what I can confirm is that yes, we do expect to acquire the 3 metro stations of TV Today as soon as the 3-year lock-in expires, and that is expected to happen by March 2018, in fact, March 31st, 2018. So yes, in FY19 we plan to acquire the 3 big metros of TV Today. I'm unfortunately not in a position to share the financial details of the deal. With respect to phase 3, like I mentioned to you, the 3rd batch is expected to be muted.
Yes, please, sir. Please go on, sir. Please go ahead.
Yeah, like I was saying that the phase 3, batch 3 auctions are expected to be muted, and even for ENIL, I expect us to basically be, looking at a few cities where it makes economic sense, either as individual cities or if, when they are networked and they become part of a larger state. So we will look at each of these cities with a with a very fine tooth comb and then decide really where we want to bid for. But it's going to be a relatively very small round.
Right, Mr. Panday, as we move into the next year, could you tell us a little more about growth prospects for old stations against new stations and what that holds in store?
Yes. So, listen, the old business or the regular business as is was obviously affected by demonetization and by GST, and then also in between by RERA, right? And different states had the effect of RERA over different months of time. Fortunately, I think all of that is now behind us. And like I mentioned earlier, even the impact of GST on our clients is now pretty much over. We see them back in business in full flow. And therefore, I expect that in FY19, our regular business should really pick up. Now, we have also noticed earlier, in one of the earlier years, I think it was in FY12, when we were coming out of a lull in FY11 or FY10, then I think FY12 was a big growth year for all radio broadcasters because there was a lot of pent-up demand for advertising, and then the industry had grown very rapidly in that year. So I expect that in FY19 as well, there might well be a strong recovery, a strong bounce back from the lows of FY17 and FY18. And FY19 could actually end up becoming a fast growth for the whole radio industry and in fact for the whole media industry. One other point I want to make over here, that for ENIL, we had embarked on a tough journey during FY18. If you recall, we had made this announcement that we were cutting back on advertising inventory simply because our listeners were telling us that they would prefer to hear much fewer ads on radio. So ENIL has gone down that path. We have focused instead on increasing our pricing. And if you've noticed, in the first 2 quarters of the year, we have actually increased price by about 8%, which is remarkable considering how poor the overall advertising markets were. So I think the biggest pain that Mirchi undertook in its journey of cleaning up the listener experience is also now behind us, and therefore I expect that in FY19, that factor also will kick in. So for ENIL, I think there's going to be 2 factors working. One, of course, is the removal of all the effects, the macroeconomic effects that the government had unleashed last year. And 2 is that the period of pain that Mirchi had taken for itself is also over.
So I just want to take that point forward. You said you had increased the prices by 8%. We all know that the first half of this fiscal has been marred because of GST implementation and also because of demonetization. Do you think that increasing prices in an environment like this, where overall ad revenues were already getting impacted, would hurt the ad revenues going ahead too?
See, the fact is that this is always a bitter pill that one has to swallow. And, there is no good time for it. And I think we did it at a time when, it was possible for us to do because we had the impact of our new stations, which was there. And, we took the opportunity to actually build on the new stations and to partly recover the loss that we suffered on the older stations because of the inventory crunch. So from that perspective, I think we were right in the timing of our decision. And I think today, look at it like this, that at the end of 3 quarters, and we just have 1 more quarter to go in FY18, I think Mirchi is better placed than any competitor when it comes to approaching FY19 and FY20. Our ad inventory levels are down to 18 minutes in peak season. And when a competition is running at 30 minutes, 35 minutes, sometimes even 40 minutes. So you can imagine that for us, the listener experience is going to weigh in heavily now in FY19. There's also new research that is expected to come in from MRUC. I think research will show up in better listenership numbers because of the tough decisions we've taken in FY18. So I think we are happy with the decisions we took about inventory crunch.
And sir, the company has launched two new stations in second quarter. So when is the EBITDA break even expected in these 2 new stations?
Usually we do not comment on EBITDA break-evens of individual stations. What we prefer to do is to talk about the EBITDA break-even of the whole phase 3 batch, as it were. So batch 1 is now completely rolled out except for Srinagar. Srinagar should also roll out very soon, maybe in a month's time or so. But overall, batch 1, which were all the big stations, the second frequencies in all our networks, the third frequency in Hyderabad, etc., that break-even should happen, in the third and fourth quarters of FY18. So we are on track to delivering EBITDA break-even, as a bunch of for the whole bunch of stations by FY18 end, or by 6 quarters, as we had said. I expect in FY19 they will all turn profitable.
And can you share some details on capacity utilization level as well as revenue per minute seen in the current quarter, sir?
Okay, now these are details that I can share with you subsequently, but we are running almost 20% or 22% inventory lower than last year because of the inventory crunch we have taken this year. I think in peak season we used to run at about 120 minutes, 130% of inventory till last year. If I remember right, we must be down to about 100% this year. So we have taken that knock on the inventory levels. In the season coming up also, I expect the inventory to remain at just about 100%. I'm talking about the top 8 markets, the top major markets. In the smaller markets, of course, the inventory levels vary market by market, but in most cases the inventory is under 100%.
And sir, last question from my side, is the company planning to expand globally? We believe that company already has its reach in Dubai. So are there any more expansion plans globally, and how do you plan to increase your listenership there as well?
Well, you're right. We are already present not only in Dubai, but we are present in the entire UAE. We have a partnership. We have a brand licensing agreement with a very large local corporation over there, and we have a presence all across the UAE, including in Abu Dhabi, Alain, and Dubai, of course. And yes, we are looking at expanding globally. There's a lot of demand for the brand. There's been a lot of dialogues in the last 12 months. We are not in a position to announce any expansion at this point in time, but yes, we are looking at expansion all around the world.
So how's been the response of the new show, as the Motilal Oswal reports suggest that the Karan Johar show, which went on air on all the ENIL channels, would boost your ad revenues? Has there any incremental ads that you've received post that show went on air?
Well, the Karan Johar show is essentially an Ishq FM show. And under a licensing agreement, we are using the content in the Mirchi network as well, in markets where Ishq FM is not present. I think it's an amazing show, and if you have heard the show, you will realize for yourself that what an honest and candid show Karan has put up. It's truly fantastic. If you look at the quality of the callers who are calling in, the kind of questions they are asking. In fact, we are really exploiting the biggest strength of radio, which is that you can stay anonymous. And you don't have to show your face, because most people are very shy to discuss their personal problems. So on a radio show, that's what the big strength is. And Karan is simply just fantastic. So I think we've got a very, very, very strong response from a listenership point of view. From a revenue perspective, it was the first edition. So yes, we have got additional revenues on the back of the show. but the impact of the show will be felt on Ishq FM a lot more, because that will provide a big boost to listenership and the perception that the station does something or the other which is so innovative all the time. As you know, we have a sales agreement with TV Today to sell Ishq FM in the 3 metros. So we are seeing that this is leading to a bigger buoyancy in the demand for Ishq FM in the 3 metros.
Okay, sir, thanks a lot for joining us today and taking us through the outlook on ENIL, what will be working for the company going ahead. As we've seen in the stock price, not much of a movement, Saloni, at least in the last 2 years. Last 2 years have been pretty subdued for this company. Let's see if there is any sort of revival that comes about in the second half. As you can see on your screen, in the last 12 months, it has been an underperformer at a time when markets, Nifty has at least given you 27% returns. Thanks a lot, Saloni, for joining us and taking us through that. But moving ahead, what else is moving the markets today? Yash Upadhyay joins us with more details. Yash, over to you.
Thanks for that, Navneet. So first up, we have Kirloskar Oil Engines, and the stock has run up as much as 11% today on the back of Mint reporting that Cummins India is in talks with the company to acquire a majority stake in a deal worth about $500 million. Moving on, we also have Welspun Corp, and the stock has gained the most today in over 7 months after the company said that it has received orders for the supply of about 124,000 metric tons of pipe. With this, the company's overall order book stands at a little under 7,500 crore rupees for the FY18. EID Parry is another name that we are looking at, and the stock had gained more than 4% today after the company said that it has decided to sell its biopesticides business to Coromandel International on a slump sale basis for 338 crore rupees. Also, we have Prakash Industries gaining close to 6% today after SEBI revoked its earlier order classifying the company as a shell company. GAIL India hit a lifetime high as well today. A lifetime high of 514 rupees on the NSE on the back of reports that IOC and BPCL are keen to acquire the company. Lastly, a couple of bulk deal reactions coming in from Ester Industries, and the stock has gained close to 6% today after Garnet International bought about 7.5 lakh shares or close to 1% stake in the company. And lastly, we have Bike Hospitality gaining in trade today as well after promoter Anil Patodia bought close to 2 lakh shares or about 0.5% stake in the company.
Yash, we'll be watching out for these as we move into the second half of the session. But there are a few more counters that I'd like to point out. Based on volumes, we are looking at DB Realty, which moved up as much as 5%, but its volumes have surged as much as nearly 21 times its previous 20-day averages. Similarly, eClerk Services up 3.7%, and we've seen quite a move there as well. Among other volume buzzers, we have Welspun Corp, Cummins India, PNC Infratech, as well as Naveen Fluorine. Some of these are also leading the gains on the Nifty 500. Well, in terms of some other stocks which have made a 52-week high, again, PNC Infra figures in that list, with Tata Global Beverages also coming along there, and you have Polaris Consulting, Jet Airways, and Intellect Design Arena all gaining substantially. Well, needless to say, there are no stocks, at least in my list, which are hitting 52-week lows, and that will be considered as a positive for a lot of bulls.
For sure, the momentum continues to be on the upside, but there are more stocks which are doing well. SR Shipping today has been locked in upper circuit. That stock's seen gains of almost 20%. Hester Biosciences, look at that counter, up another 14%. And Agam and I interacted with the management last week with Mr. Rajiv Gandhi, who clearly mentioned that the margins from their new segment, diagnostics, where they expect the revenues to flow in the second half of this fiscal, will be about nearly 40%. So Hester Biosciences up 14%. Fortis Healthcare is the other one. Agam has already highlighted Jet Airways, but one of the other F&O counters, Just Dial, is the one which is doing pretty well in today's trade. Just Dial is up almost 4.5%, Agam.
So plenty of stocks to watch out for in today's day of trade, despite the fact that the underlying sentiment is going to be a very calm week. But let's not forget, it is expiry, so there will be a lot of buzzing counters there. But with that, it's a wrap on this edition of Trend Spotting. Up next is Hot Money, so stay tuned in a blue bucket.